In today's session, we'll talk about margin trading feature on Binance Exchange. Now, before we get started, I don't want you to be confused between futures platform and margin platform. So both operate somewhat in a similar way, but futures platform supports up to 125x leverage, and it's also limited to just Bitcoin and Ethereum as of now. And whereas margin trading, it supports up to 5x leverage, and it's available to many pairs, not all the pairs, but quite a few coins support margin trading. So we'll talk about the functional aspects, and we'll look at the key API. I'll show you how to call some important APIs which are related to margin trading. So without any further ado, let's get started. Margin trading is a feature that allows you to borrow funds. It might look so simple, but being able to borrow funds opens up two new possibilities. One, you can trade with more money than what you have, and second, you can go long as well as short. So let's look at each aspect in detail. Alright, let's try to understand the difference between a long trade and a short trade. So in a long trade, you would try to make profit off of price going up. For example, in this chart, I have XRP USD chart open. You try to let's say buy here at a lower price, and then when the price goes up, you might want to sell it here, right? Uh, and you would make a profit of, let's say, how much? Yeah, you would make a profit of roughly 25%, right? So in a long trade, you would buy it first and then sell it later at a higher price. So that's a long trade. To look at a short trade, you would do exactly the opposite. So you would first sell first at a higher price and then buy back at a cheaper price. But you might wonder, how can we sell a coin when we don't even have them in our account? So that's when margin trading comes in handy. So because margin trading allows you to borrow funds, you can borrow the coin that you want to short. So in this case, let's say I want to short XRP. So I would first borrow XRP coins when the price is at this level, and then I would sell these coins at a higher price. Then later, if the price falls down, I would try to buy it here at a cheaper price, and then I would return the coins that I borrowed earlier, because I have to pay interest rate. So the thing with margin trading is, even though you can borrow funds, you have to pay interest rate. So you would return the coins that you borrowed over here. So you're still making profit because you sold at a higher price and buying back at a cheaper price. So that's the quick difference between a long trade and a short trade. Another advantage with margin trading is that you can trade with more money than what you have. So let's take this chart for example. Let's say you want to buy it at this price. Let's say you bought it here, and you sold it at this peak. And let's say what the price difference is. Let's mark this in red, and I think this is roughly 2%, right? Yeah, roughly 2%. Okay. So let's say you have $100 in your account, and you bought XRP at this price, and you sold it at this price. So that's 2% difference. So you would make 2% of $100. So that's $2. So your profit would be $2. But with margin trading, you can leverage up to 5x. So in this case, because you have $100, you can borrow $400 more because it supports 5x leverage, and you can trade with $500. So in that case, you would make a profit of 2% of $500. So that's $10. So that's the good thing about margin trading. So if your trades are successful, then your profits are also multiplied by the margin level. So there is also a drawback with this approach, which I'll talk about in a minute. But this is a second advantage of using margin trading. Let's do a quick comparison between spot trading and margin trading. Let's see how the numbers add up. Suppose you're trading with $100 and you made 2% profit. So your gross profit would be 2% of $100. So that's $2. And your buy fees and sell fees would be 0.1%, which is 10 cents and 10 cents. So your net profit would be $1.8. So when we compare them against margin trading, let's take 5x leverage because that's the maximum leverage supported for the margin trading. And let's say you're starting with $100. So you can borrow up to $400. So you'll be trading with $500, and if you made the same gains as 2%, your gross profit would be $10. But here is where things change a bit. So your buy fees and sell fees would be 0.1% of $500. So that's 50 cents. So because all of these are virtual funds, these are deducted from your $100. So that means you end up paying 0.5% as the fees. and same thing with the self fees, you'll end up paying 0.5%. So this is the reason why exchanges allow you to do margin trading, because they can charge you more fees, so that means more incentive for them. So this is the biggest drawback about margin trading. And your net profit would be $10 minus $1, which is $9. Now, one thing to keep in mind is you're breaking even with spot trading. You're breaking even at 0.2%. That means irrespective of, so if you enter a trade, if you don't make more than 0.2%, you would lose money, right? Only when you make more than 0.2%, that's when you're profitable. But with margin trading, if you don't make, with 5x leverage, if you don't make more than 1%, then you end up with a loss. So you have to be absolutely sure that your strategy makes more than 1%, otherwise you will end up in losses. So this is what I don't see many people emphasizing this point. So this is why I suggest you to be very, very cautious when you deal with margin trading. Yes, the returns are high, but the risk is also high, so you have to trade carefully. One thing that I did not mention here is the interest rate that you have to pay when borrowing funds. I did not add it here because first of all it's very low, and the numbers are different for different symbols. I'll show you the link where you can get the exact rate for interest rates, but I just want to emphasize on the trading fees in this slide, so I did not include that here. I created this quick template to illustrate how the extent of margin is going to impact your liquidation and your trading fees. So starting with 1x leverage, so 1x is no leverage, right? So 1x is just like spot trading, so you're not borrowing any funds. So with 1x leverage, the only time when you get liquidated is when the price drops to 100%, which is very unlikely, but yeah, you have more room for your price to breathe. And your trading fees is just a regular trading fees, which is 0.1%. Things get interesting when you move to 2x leverage, which you can change it with the slider. And I'll leave a link to this template in the description box. You can download it and check it out. So when I change the margin to 2x, you can see my liquidation drops to 50%. So if I lose more than 50%, then I get liquidated. So I have to make sure that my strategy, if I have to make sure that I don't lose more than 50%, otherwise I lose all the funds. And your trading fees are also high, so you end up paying 0.2% per trade. So if you take that into a complete trade, which is buy order and sell order, it becomes 0.4%. So if I don't make more than 0.4%, then I end up with losses. So I have to make sure that, you know, if I'm doing a 2x leverage, my strategy gives me more than 0.4% returns. And I can change the slider all the way up to 5x. So if I increase the leverage to 5x, you can see the liquidation price is just 20%. So if I lose more than 20%, then that's it. I lose all my funds. And the trading fees are also 0.5% per trade. So if my strategy does not make more than 1%, then that's it. I end up with losses. And even if I buy it and sell it at the same price, I would still end up losing 1%, right? So that is one thing that you have to keep in mind when you do margin trading. And like I said, I'll leave a link for this template in the description box. You can download and check it out. In order to enable margin trading, first log into your account. Once you log into your account, you go to your dashboard and you can see 4 different tabs here: exchange, margin, futures, and lending. So go to margin tab and click on open margin account. Select this option and click on I understand. That's it. Margin trading is open. Now you can see on the top, it by default, it enables only 3x leverage. To change it to 5x, just click on this. And if you confirm, you'll be prompted with some questions. So you have to meet the following requirements to raise your maximum leverage from 3x to 5x. Okay, so you say confirm, and that's it. You have changed your leverage to 5x. So that's how you open your margin account. It's just 2 simple steps. You don't have to create a separate account, or you don't need a separate credentials to that. Once you create your margin account, go to wallet, and inside wallet, go to your margin wallet. And if you scroll down, you can see all the different symbols that are supported for margin trading, and you can see several columns over here. And on the right hand side, you can see an option to transfer, borrow, or trade. So before you can borrow any funds, first you should have funds transferred to your margin account. So let me transfer some funds from my spot trading account to margin trading account. So let me transfer from USDT. I have $700 in my other account, so I'll just transfer 20 over here. click on confirm, and you can see the amounts getting reflected, and there are no fees for transferring funds. Okay, so you can just keep transferring funds between your exchange account to margin account, so there are no fees with that transfer. Okay, and if you want to, once you have enough funds, then on the top left corner, over here, yeah, you see the overall BTC value of your complete account holding. So you might be holding 10 different coins in your account, but this on the top left corner, it shows the overall portfolio in BTC, and the amount that you can leverage depends on this total amount. Okay, so right now we can see I have about 19.99, which is around 20 US dollars. So if I click on borrow and repay, you can see I can borrow up to $80, right? In the previous example, the template that I showed you, for $100 you can borrow up to $400, right? Similarly, for $20, that's 4 times 20, which is $80. So I can borrow up to $80 because of the 5x leverage. Okay, and you can do something similar with any other funds. So I can not only borrow USD, I can borrow any funds. For example, if I want to BNB, I can just click on borrow, and I can borrow up to 5 BNB. Okay, and yeah, so this is how the interface looks like. Okay, this is the link where you can find the interest rates for borrowing funds, and you can see that the interest rates are different for different coins. For example, for Bitcoin it's 0.01%, and for Ethereum is twice as much, which is 0.02%, and it's actually quite less when you compare it with trading fees, because the trading fees is just 0.1% and this is 0.01. So the interest rates are 10 times less than trading fees, which is quite less. And as long as you're doing intraday trading, these interest rates should not influence that much, because keep in mind that this 0.01% is the daily interest rate. Okay, and it's calculated every hour. So what I mean by that is, if you're in the trade only for just, let's say, 2 hours, then you'll end up paying 2 by 24, which is 1/12 of the 0.1%, which is roughly 100 times less than your trading fees. So as long as you're doing intraday trading, or short-term trading, the interest rate should not affect you that much. If you want to know the exact numbers, then I'll leave a link for this link in the description box. You can check it out and do the calculation. I want to show you a couple of configurations to minimize your interest rates and trading fees. So first, if you log into your account and go to dashboard, if you scroll down, and on the right hand side, you can see an option to pay your fees using BNB. So to use this option, you should have some BNB in your account. And if you decide to pay your fees using BNB coins, then you get a 25% discount in your trading fees. So instead of 0.1%, your trading fees come down to 0.075%. So you can save 25% in your trading fees by enabling this option. And you should also have BNB in your account. So if you enable this option and you don't have BNB in your account, then this will not work. So yeah, so have some BNB and enable this option, and then your trading fees are reduced by 25%. And second option, go to your wallet and go to margin account, and here you have an option to pay the interest rate that for the funds that you borrow using BNB. And if you turn on this option, you can see that you get up to 5% discount on your interest rates. So again, for this option to work, you should have BNB in your margin account. Okay, so you can enable this option to get some discount on your interest rates. So these are the two options that you can enable in your account to get some discount on your trading fees as well as interest rates. Finally, I want to do a quick comparison of how the funds flow between a long trade and a short trade. Starting with the long trade, I'm going to take a BTC USDT to illustrate this example. So you would start with USDT and buy BTC. And if you want to increase your position size, you would borrow more USDT and buy more amount of BTC. And later when you exit the trade, you would sell BTC. You would convert the BTC back to USDT. And preferably if you sell it at a higher price, then you would end up with more USDT than you started with. So that's how you make profit with a long trade. And this is how a typical trade works on spot trading exchange. Moving on to short trade, this is where things get a bit interesting. So the first thing you would do in a short trade is borrow the coin that you want to short, in this case BTC. And the amount you can borrow depends on your entire portfolio size. So if you go back to my account, you can see that I have $20 Okay, but I might be holding 10 different coins, and the overall portfolio size, the net worth of my portfolio is shown on the top left corner. Okay, so this amount dictates how much I can short. Okay, so depending on that, I can borrow appropriate amount of BTC, and I would sell that BTC to get USDT. And when you do this step, you would notice a spike in the balance. And don't go ahead and spend these funds on something else, because you would need these when you want to exit the trade. Okay, and later when you want to exit the trade, you would buy back BTC with these funds, and then repay the debt that repay the debt, because you borrowed BTC at the beginning, right? So you have to repay that later. So that's how the funds flow in a long trade and a short trade. So if it's confusing, don't worry about it. I'm going to do a quick demo, and I'll show you exactly what's happening in each step. Okay. All right, now let's do a quick demo starting with the long trade. You can see that I have $20 in my account, and I also transferred one BNB from my exchange wallet to pay for the fees and for the interest rates. And you can see that my overall account portfolio is worth $34, and this is what dictates how much I can leverage. Okay, and I also have the trading interface open. If you go to the margin tab, we can see that we can place a limit order or market order, or any kind of order that we want. Okay, so I want to leverage some USD now, so click on borrow, and you haven't borrowed any USDT yet. Okay, so go to the borrow tab. You see two tabs, borrow and repay. So if we go to borrow tab, and you can see I can borrow up to $140, but I don't want to go all the way up. I just want to borrow $20 and click on confirm. That's it. You can see that the balance has gone up by 40 and the amount borrowed is 20. Okay, now if I go to my wallet and I want to place an order at this price, you can see that I can place with $40. Okay, click on buy. That's it, my order got filled. Now if I go back to my wallet and hit refresh, yep, you can see that I bought BTC, but I still have a debt to pay with USDT. That's roughly $20. Okay, and let's see, let's exit the trade. Okay, so click here and click on 100%, and yeah, if I click 100% and sell BTC. Generally you would do this step when you want to sell it at a higher price, right? So let's see if it gets filled. Yep, it got filled. Let's go back to the wallet and hit refresh. You can see that the funds have reverted back. So that's how you do a long trade. And if you want to repay the amount, just click on borrow and repay and select the repay tab. You can see that you have $20 to repay. Select that. If you click that, it gets auto populated. Click on confirm repayment. Okay, so yep, that's it. You can see that the borrowed amount is 0 for both of these. So that's how you do a long trade. Okay, and if you the borrow and repay step that I did earlier, you can also do it over here. So if you go to the margin tab, you can see normal, borrow and repay. So depending on a long trade or short trade, you can select these options appropriately. But if you select these, you don't really understand what's happening behind the scenes. So that is the reason I did each individual step manually, so that you get a clear understanding of what's happening. Okay, now let's do a short trade. Okay, starting with the first step, we're going to borrow some BTC, right? So let me unselect this and click on the BTC tab, click on borrow and select the borrow tab, and you can borrow up to 0.01. So I'll just select 0.002. Okay, click on confirm borrow. Yep, I borrowed the funds. Next step is to sell BTC. So go to this tab and I want to do a market order, sell. Where is it? 100%. Yeah, so I'm going to sell BTC. Yep, I sold it. Let's see what the funds are. I don't know why these balances are not auto populated. I have to refresh every time when I do a trade. It's just annoying. Okay, after you refresh the tab, you can see that the new balances over here. You can see a spike in the USD balance. So earlier it was just 20, but now because I shorted BTC, you can see that I have $34. Okay, but I have to repay this debt, so don't use this funds on something else. Okay, now this step is done. Now when you want to exit the trade, you would buy back BTC using the USDT. So let's do that. Limit order and this one. So we have we have to repay 0.002, right? So let's buy that amount. So select this, 0.002. Okay, click on buy BTC. Let's see what happens. Should get filled pretty soon. Let me buy it at a higher price. Yep, it got executed. So this step is finished. Now let's go back to our wallet, hit refresh. Okay, now you have purchased BTC. Just click on borrow and repay and go to the repay tab and repay the debt. So that's how you do a long trade and short trade. But if it's really confusing to do a borrow and repay from this tab, you can also do it from here. Okay, but what I've noticed with this is it doesn't really tell you what's happening with your funds, and sometimes you might end up with errors. So that is the reason I prefer to do it over here, because from here I can clearly know what's happening with each fund. Okay, but the choice is yours. So you can either use these options here or do it from here. Okay, that's it for this video. I wanted to cover APIs as well in the same video, but it's already quite lengthy now, so I thought I'll make a separate video because it requires its own video. But there are so many APIs to cover and it deserves its own video. So I'll talk about it in a separate one. That's it, guys. Have a good day and I'll talk to you soon. Bye.